The aristocrat conglomerate giant 3M, ticker MMM, currently trading at $101.95. It's one of the most recognizable companies within the dividend investing community. Over the last 5 years, the share price of this company has been on a total downtrend. If you initiated a position within the last 5 years, you are most likely in the red. It is down 50.26%. That's losing half the value of your investment. This company has been pretty much stagnant for more than a decade. Over the last 10 years, the revenue only increased 1.36%, EBITDA minus 14.41%, net income 2.66%, and adjusted free cash flow had remained flat at minus 0.04%. So at a quick glance, this company is not growing its income that much. It does pay a dividend with a current dividend yield of 5.84%, which calls the attention of some investors, and the payout is 61%. They have paid a growing dividend for more than 50 years, but in recent years, the CAGR has been slowing down. Let's take a look at the return on capital employed. You might say, okay, their profits are not increasing as much, so maybe they're investing it to make more money. Wrong. The ROC of 3M is minus 0.54%. For those who don't know, the ROC is the measure of how good a business is at generating profits from capital. 3M has truly not budged at all in the last decade. I'm currently showing you a discounted cash flow where we see the inconsistency of the free cash flow. It has an average growth rate of 0.71%. For our assumption, we will say that 3M remains with the same growth rate, a perpetual growth of 2.5% and a discount rate of 8%. We get a fair value of $88.81. You may ask yourself, if the stock is trading at 101 and the fair value is $88, is 3M overvalued? Not necessarily. A discounted cash flow formula is part of your analysis when researching a stock, but there is something that a discounted cash flow can calculate, and that is risk. 3M currently has 2 ongoing lawsuits which could dent the margins of the company. One is for PFAS, which is also known as the forever chemicals. These chemicals are found in polluted water or some household products that we use, where they remain in our bloodstream and our body cannot decompose them. The other one will be for the apparently faulty earplugs provided to the military by a company that 3M bought out in the past, having a little over 500,000 cases. My heart goes out to those who have been affected by the chemicals or the earplugs. Hope everything gets resolved in the correct way. Putting this as an investor perspective, we cannot calculate the true value of 3M until we get a settlement from both lawsuits. That value is key to see how the cash flows of the company will be affected in the future. By not having them, it is very difficult to get a clear picture, and all we can do is some rough estimates. 3M is a company with a strong brand, diverse products, global presence, and strong distribution network. Is 3M a good investment? The answer is unclear. The company has been having issues growing while dealing with 2 ongoing lawsuits, which brings a lot of uncertainty. We do not know how much this can affect the future cash flow. If the settlement is a value that 3M can easily handle and pay, this will be accounted for the valuation formulas and could be a catalyst for 3M. Assuming that's the case, then you will be buying an aristocrat for cheap. But here's the other deal. The company is not even growing to start with. Pre-settlement, 3M is not doing that good. So if you're investing in 3M, be cautious and always follow your investing thesis. Let me know in the comment section below, do you own 3M? How is the investment in this company treating you? I would love to see other investors' perspective. Thanks for watching, and I'll see you in the next one.